Welcome back. You're watching Taking Stock, and we are taking stock of a week in which the headline index didn't do much, but a lot of mid-caps surged. We are in conversation with the top team at Emkay. Krishna, what's the advice now from here on? Stick to equities? Do you think they will still outperform the rest of the asset classes, or is there temptation to book some profit, especially for those who would have entered, say, post-budget, and since then the market has given such a clean run?
See, I am always a long-term investor, so I wouldn't suggest investors to exit equity in any fashion. What the thing is that if the valuations of any of the stocks that they're holding, if they believe that they have gone beyond reasonable, what can they understand, then it's a point, okay, you can book profits. But over a 3-5 year period, I believe equity as an asset class will outperform and will deliver superior returns. So you need to be invested. Sometimes from people like you, I receive questions that, okay, what is the next multi-bagger? But for that, you have to hold a stock for 3-5 years for it to become a multi-bagger. So I would request all investors to not have the temptation of taking short-term gains and look at the longer-term picture. So stay invested. I'm sure it will deliver superior returns.
Okay, that's some sane advice. What do you think is the next worry for the market, or the next problem? I mean, where do you see the negative trigger emerge from?
See, as far as locally, if you look at it, then for temporarily there is this expectations, at least that in this monsoon session, that your GST bill, etc., will be approved. And for whatever reason, if it doesn't happen, then there could be a short-term blip because of that. Okay. Then the expectations post-monsoon is about the economic recovery in the second half of the year. So that sense you will get in the first quarter next year. So if the expected economic recovery, if it doesn't happen for whatever reason, then valuations will become expensive. So these are the two things as far as domestics that you would be concerned. So for the next 6 months, for the next 4-5 months, at least I don't see there is a lot of hopes in the system. And that hopes, whether it is justified or not, we'll come to know by the year end or maybe by the first quarter next year. So those are the two things that the market needs to worry. Globally, I think every time you keep on learning new acronyms, so I don't know which is the next acronym that we have to worry about. Okay. But I'm sure, let's see how the contours of this Brexit, how it finally pans out and what are the challenges over there. So that could be something which we need to worry about.
Okay, for now, of course, the market has moved on from Brexit. Krishna and Dhanajay, thanks a lot for dropping by to our studio and for your time. So that's the view from Emkay. But for our viewers, let's discuss the next week's market action as well. Jay Bala is now joining us. Jay, hi, good to have you on the show. So, what do you think of the current market setup? At index level, we are consolidating. Do you get a sense that we'll break out again?
What the market is doing at this point of time is actually, so far we haven't seen an explosive price action, but the market is trending up. That is good. So, but if the market doesn't explode in the first half of next week, we need to tweak the short-term view of the market. Basically, we are looking at a short-term volatility stretching to something like 8 weeks plus. So, it's very important for the market to see a powerful move in the first half of next week. So, if that doesn't happen, we're going to change the short-term view. But whereas the medium-term view, which we presented in March, saying that the market is heading for record highs, somewhere close to 9,600 plus, that doesn't get impacted. But usually when I project a price projection or a time projection, it's always conservative. So if this scenario were to pan out, where the market doesn't explode in the first part of next week, we got to wait for the time frame to be a little further down, something like second half of 2017. So it's a very important week for the markets. So it's very important that the markets see a very strong surge in the first half of next week.
Okay, Jay, hi, welcome to the show. Can you tell us your view on individual stocks then? What are your top buys and top sells at this juncture in the market?
Yeah, let's touch upon the banking index. The banking index has done a tremendous job, and it's been doing slightly better than the Nifty. And despite this fact, the fact that SBI and ICICI haven't taken out a key resistance for me is, it's going to be pretty important for the market. The next 10% of the move for SBI and ICICI is going to be pretty important. If ICICI were to peer us through 285, 295, that's going to be a very important signal for the market. Same for SBI. SBI needs to take out 255. If it does that, the thesis that the market is heading for record highs will be reiterated at this point of time. Coming to other sectors, now we've seen the BSE Auto Index clock record highs. That's very important. We've been saying that from 2009 the Auto Index has been the leader, and so we saw record highs come through in Bajaj Autos and Hero Motors. So this sector remains quite strong. And within the sector, Maruti still got lots and lots of steam. We are looking at much beyond 5,000 to 5,800 for Maruti. So this is going to be a pretty important stock for the medium term. And on the auto ancillary space, if you look at Bharat Forge, it's looking very interesting. But be careful, it's in the midst of a correction. If you are conservative, wait for the stock to take out last week high, which is somewhere about 785. Once that is done, this stock is set to double. We need to place a stop below the low of 24th June, which is about 720. So it's pretty important for the stock, but it's a very important juncture for Bharat Forge. We've been very bullish on the mid-cap cement space. They've been doing quite well. So we are positive on that space, but the risk reward is quite low from here. So if you are already long there, hold on to it, but if you don't create fresh positions there. So that's the view on some of the stocks here.
All right, well, we've run out of time, so thank you for joining us and giving us your view on individual stocks and some sectoral calls as well. On that note, we will have to wind up with this edition of Taking Stock. Thanks so much for watching. We'll see you guys again on Monday.